Welcome everyone to the Full Disclosure Podcast. We have an explosive show today, and I want to kick it off with a mind-blowing story that no one, or I should say most people, have no idea what it is and what's going on, because most people are not talking about it. And as you've heard me say this before, my mission is to blow the lid off some of the biggest financial stories hiding in plain sight. I'm your host, John MacGregor, so buckle up because I want to share some things you're probably not aware of that will impact your wallet for sure. Remember, knowledge is power, and together we can stand tall against the forces that seek to destroy our financial life. And that force is out there and it's strong. So folks, here we go.
If you have concerns about your financial future, let's be honest, the world shapes your wallet. We're taking you behind the scenes to look at what's really happening in the real world. Inform, prepare, and empower. This is the Full Disclosure Podcast with your host, John MacGregor.
All right, before we dive into these stories, don't forget to hit subscribe because you do not want to miss out on future episodes. The gloves are off, folks, and I got to go deep on this stuff and get this information out there. We're at a critical juncture in our society and certainly with the economy. By the way, we have an exclusive next week that you do not want to miss. It's an explosive story that will have a domino effect that will ripple like a tornado across the U.S. and beyond. So you do not want to miss next week. So please hit subscribe. Just a couple of reminders. If you want to learn about my simple and proven cash flow wealth building strategy, you can find that at go.johnmacgregor.net. go.johnmacgregor.net. It's a very brief overview of my simple cash flow wealth building strategy. I think you'll find it very, very interesting. Also, a reminder, everybody, I recently put together a free document titled The Ultimate Guide to Wealth. The Ultimate Guide to Wealth. This white paper is really the culmination of my 28 years of me working with thousands of individuals and entrepreneurs of all walks of life. It's really my best practices that I've accumulated, showing what you need to do to build and sustain wealth. And I also get into my wealth building strategy as well. It's a real powerful and popular white paper that you can get on my website at johnmacgregor.net. So check it out. All right, folks, we got a lot to cover today, and there are some mind-blowing stories, and sadly, they're not being talked about. But again, that's what this show is all about. But I do want to start by saying, look, I know we cover some heavy and often distressing information about what's going on in our economy and around the world. But folks, just so you know, I'm not giving up. No way. I'm in this fight to win, which is a key reason I do this show. Yes, things do look bad, but we've been through bad times before and we've always come out stronger. So many of you may call me crazy or delusional. That's fine, but I'm an optimist and I'm not giving up this fight, because the way we get back to where we need to be is by informing people that are uninformed or misinformed about what's really going on. And I know a lot of people are very busy, they're working hard, they're raising families, trying to put food on the table, keep a roof over their head, but sadly, too many people don't see what's happening or what's coming until it's too late. And again, that's why we all have to get this information out there. It's another way of me asking, please forward this show out to your network, because we need more people to understand these things so more people make informed decisions. And that's why that cliche that sunlight is the greatest disinfectant is so true and so powerful. All right. So this first story is shocking and scary at the same time. And yes, I got to talk about inflation again. And I know a lot of people are tired of hearing about it. But again, it's so important you understand what's really happening here, especially in this particular story, because it's getting worse than I thought. So, did you catch the latest on why our wallets are feeling a bit lighter these days? Folks, prices are still on the rise, ticking up by 3.2% in February from the year before. And take a wild guess what the major cause is, or a major cause, I should say. It looks like insurance. That's right, insurance prices is a big culprit behind this stubbornly high inflation number. And this is according to the folks at the Federal Reserve. I know, insurance, right? I mean, who would have thought? It's from healthcare to your home, especially your car, which we're going to talk about. It's getting pricier just to stay insured. And this is hitting insurers hard. And they're not just absorbing these costs, no way. They're passing them right back to us, you and me, the consumer, right? In fact, where I live, in this small town in Auburn, California, major insurance companies are pulling out altogether. And they're not insuring homes at all, because the costs and the regulations imposed on these insurance companies is staggering. In fact, many are pulling out of California altogether. State Farm, Allstate, and now Hartford. Also, a ton of smaller carriers have announced that they will not be renewing homeowners policies in California in 2024. They're out of here, folks, just like so many other people that are leaving California. So Jerome Powell, as you know, he's the head honcho at the Federal Reserve. He laid it all for Congress last week, and now we've got the data to back it up. He mentioned it's a complex issue, which it is, influenced by a whole bunch of stuff. But when you dig into the details, things like rising labor, material costs, healthcare, they're a big part of the story, especially now that the extra Medicaid support from pandemic times is winding down. Then you have natural disasters like wildfires and storms. These are all bumping up home insurance rates. And then you have the soaring costs of car parts and ongoing supply chain issues, making car insurance even pricier. And then you have this push for electric vehicles, right? Which is also radically pushing up insurance rates on EV cars because they're so expensive to fix. And it's hard finding mechanics that are certified to fix these EV cars. By the way, I was stunned when I saw this. Do you know how much an EV battery costs to replace? Just think about it. How much does an EV battery cost to replace on average? Get this. EV battery replacements range from $6,500 to $20,000 based on the size and the manufacturer. That's just the battery, folks. And just overall, the average cost of full car insurance rose to $2,543 in 2024. That's up 26% from a year ago. Let me repeat that. The average cost of full car insurance rose to $2,543, 2024, up 26% from a year ago. I mean, the average American just can't catch a break anymore, right? But this is the bigger story that I mentioned at the early onset of this show. This is what's mind-blowing that kind of ties all of this together. And you have to ask yourself the question, is Big Brother riding shotgun with us? In other words, is your car ratting you out to your insurance company? So let me ask you, do you often drive over the speed limit? How about, do you brake too often? Do you tailgate others at times when perhaps you're in a hurry for a meeting or whatever it is? Do you roll through stop signs on occasion? They call that the Hollywood stop, right? Do you do any of those things? I mean, we all do, right? Well, get this. It turns out your car may be spying on you. That's right. Big Brother just might be riding shotgun with you. The New York Times, of all publications, reported and admitted that new cars made by GM, General Motors, are spying on your driving behaviors and ratting you out to brokers who then sell that data to insurance companies who then see your driving behaviors, rate you as a reckless or high-risk driver, and then they jack up your insurance rates. Your General Motors car is spying on you, folks. And trust me, if there's money to be made for a car manufacturer to do this, they will all do this beyond General Motors. So, think about this. That high-tech gear in your car, the GPS, OnStar, now cars have internet access. They're not your friend, folks. They're actually harvesting your data and then selling that to insurance companies. I mean, it's crazy. And then the automakers are sharing consumer driving behavior with the insurance companies. Here we go, folks. Big Brother is just watching over us, and it's just starting in our cars. I mean, this sounds just like a story right out of China, right? And here's where it gets worse. You know how insurance companies have been trying to sweeten the deal by offering discounts to drivers who are totally okay with having GPS devices or apps to keep an eye on their driving habits? Well, as I said earlier, it turns out that when those same drivers are not exactly thrilled about being tracked, insurance companies don't just throw their hands up in defeat. No, they've got plan B, trust me. Enter companies like LexisNexis. These are the middlemen in this whole scenario. These guys are scooping up car data directly from the big car makers like General Motors, as I said. And then, as I said earlier, these manufacturers are making serious bank by selling this info. And what happens next? This data gets turned into a risk score for drivers, which then play a big part in deciding how much you're going to pay for your car insurance. The twist on all this? These businesses swear up and down that sharing this data is all above board and with consent, of course. But let's be real. Most drivers are in the dark about their data being passed around like a hot potato. I mean, I had no idea this is happening. I got a Lexus, but I also have a 66 Cadillac DeVille convertible, which I think I'm going to start driving a lot more of because that does not have GPS, trust me. And when drivers find out their risk scores have been shared with their insurance providers, it's often because their insurance bills have taken a leap forward. So yeah, it's a bit of a sticky situation where not everyone knows the full story. So this all goes back to the reversal of inflation, which is now rising. And these numbers just came out. Over the last year, diesel, cotton, gold, and other commodity prices are up more than 10% over last year, with much of the rise in the last few months. And all this matters a ton because the Fed's got this goal of getting inflation down to around 2%. But this is a long way from the Fed's 2% inflation target, right? 10% growth in commodity prices just in the last couple of months, and the Fed's trying to get down to 2%. And by the way, it's really important to understand and study the prices of commodities because commodities are really the underbelly of our economy. And just so you understand, a commodity is a physical good that is used in the production of almost everything we use. And commodities include cattle, I said gold, oil, oranges, precious metals, sugar, wheat, basically anything that's taken from the earth used to produce products. In fact, my first job during my summer year, my freshman year in college, was trading soybeans on the Chicago Board of Trade. That was an eye-opening experience. Talk about wild. It was like going to war every single day. And if you've seen that movie Trading Places with Dan Aykroyd, and they're trading orange futures in these giant octagonal pits, yelling and screaming and fighting. That's exactly what this was like. Those Dan Aykroyd and Eddie Murphy, hilarious movie. But that's exactly what it was like trading soybeans in Chicago back in the late 80s. So anyway, monitoring the cost of commodities is really, really important because it can give you a lot of insight into inflation and foresight, I should say, into inflation, hence the economy, and also the stock market. And I do get that question a lot. People ask me, John, is there a crystal ball to predicting the movement of the stock market? And I would say, look, there's no crystal ball or magic bullet per se, but there are certain indicators that can give you tremendous insight into the future, the direction of the stock market. And commodity prices are really, truly one of them. It can tell you a lot about what's coming down in the future. Because when things like prices of copper and oil rise, so does the prices of groceries, manufactured goods, transportation, energy to heat our homes, etc. And that can give you a lot of clues into good stocks that you can buy. So, based on all of this, here's the big news that just dropped last Wednesday. You would think with inflation, with all inflation indicators rising, including, as I just said, commodities, you would think the last thing the Fed would want to do is to lower interest rates, which would be like throwing kerosene on this inflation fire. When prices are rising, the Fed needs to raise interest rates to slow things down and get prices to where they should be. And I'm not saying the Fed should be raising interest rates right now, but I mean, before they even think about lowering interest rates, which are currently sitting at around 5.3%, the Fed just announced this past Wednesday that they're holding steady on interest rates right now, which is fine, but they made no changes to its earlier forecast of lowering rates 3 times this year. Lowering rates 3 times this year, despite the rise in inflation numbers. Because folks, this is only going to compound the inflation problem that's getting worse. And who does that affect the most? Who does inflation affect the most? Yeah, it's the lower income and the middle income wage earners. That's who always gets screwed. And they're already stretched given these prices that we just talked about, the insurance prices. And I'm going to talk about wages in a moment because that's an important component of this conversation. Because as I said last week, I strongly believe the Fed is very political. And they'll do everything in its power to prop up the economy from now into the election. In fact, I just read an article on that today, saying basically the exact same thing. I mean, think about this. How can the Fed make such a bold prediction in the future over the next 9 months, especially when the data is going against them right now? It's like saying, I use this comparison, it's like saying, I'm going to stop watering my yard for the next 9 months because my forecast says it's just going to rain and we won't need to water the yard. It's just crazy. I'll just never understand how the Fed can come out and say something like that, given a 9-month forecasting, and they're going to lower rates 3 times. It's unbelievable to me. Now, I will say, granted, lower rates would be a huge relief for home buyers, right? Because mortgage rates would go down. Small businesses who rely on borrowing would benefit. Credit card borrowers would benefit because of the lower interest rate on the credit. And of course, that would fuel the stock market. But now is not the time to be lowering interest rates given the inflation numbers I just talked about, because that's just going to spur more inflation. And by the way, speaking of cars and inflation, another thing you need to know and make others aware of. So, have you heard this? Getting a new car these days, it's not just about what you see on the price tag. It's like there's a big surprise after you buy that car. There's a lot more. The extra costs when you buy a new car, you really got to think about, because they've basically doubled in the last decade. So, if you're eyeing that shiny new ride, remember, it's not just the sticker price you're signing up for. The deal is, and this is according to AAA, driving a new car around for about 15,000 miles a year will now set you back an extra, get this, $7,612 on average per year. Again, this is according to AAA. They stated that driving around in a new car for about $15,000 miles a year will set you back on average $7,600 each year. And that's not even touching the depreciation on the car when you drive your car off the lot. Back in the day, you'd only be looking at about $4,000 in additional costs. And boy, have things changed, right? And get this, Edmunds, those are the car experts, say that the out-of-pocket expenses for owning a new car, again, these are the out-of-pocket expenses, can swing between $29,000 to $36,000 over 5 years. Take the Ford F-150, for example, America's favorite truck. That beast could cost you an extra $36,400 just in 5 years on top of what you paid to buy the truck. And here we're talking gas, the interest on your loan, the insurance we just talked about, keeping it running smoothly, taxes, fees, the odd repair. And again, that's just driving just driving 15,000 miles a year. So for those of you dreaming of a new Ford F-150 over the next 5 years, you're not just spending the $48,000 on the sticker price. Add in those extra costs, and you're looking at shelling out about $85,000 in total. And for the electric vehicle fans listening to this, the Tesla Model Y, which is the top EV in the US, well, it's a bit cheaper in comparison, but it's got an extra cost of $34,500 over 5 years, and you better hope that battery doesn't go out. So with the Tesla, the total cost with the purchase price, get this, would be roughly $91,000 if you factored in all of those other expenses. So the point is, yeah, owning a car nowadays is definitely more than just the price you see in the showroom, and you've got to factor in these other prices, especially today since they've doubled over the last 10 years. And folks, these numbers, these high costs are all a result of high regulations, policy, control, and also flooding our economy with borrowed dollars, which we have done massive amounts over the last several years. And none of this has to be this way. All of this can change fairly easily and quickly with the right policies in place. So that leads us to our next subject. So guess what's been happening with wages in the US? Well, they're taking a step back towards what they used to be before the pandemic chaos. And that's what the latest scoop from Indeed is telling us. And Indeed is a major online hiring service. Perhaps you've heard of them. Indeed has this wage tracker that looks at the salaries listed in job ads on their site. And the update for February shows that salaries have gone up by 3.3% from last year. But if you rewind to January of 2022, wages were jumping by about 9.3%. It really looks like there's not as much of a scramble amongst employers to snag up new hires as there once was. There's this guy, Nick Bunker. He's a labor economist over at Indeed. He says that the slowdown in wage growth, he says, is really, really eye-catching. He said, we're looking at almost 3% drop in wages in the past year. And it's not just pocket change we're talking about. This slowdown is happening across the board. But get this, sadly, it hits the hardest in the low-wage sector. Get this. Pay raises in that low-wage sector have cooled down to 3.4% from a whopping 12.5% at the start of 2022. These wages are coming down, but they're really affecting that lower income class. The big question is, how long is this going to last? And this decline, will this continue? Now, if you're on the higher end of the wage spectrum, your growth slowed from 8.2% to just 2.6% in February. And for those in the middle, the year-over-year growth dipped to 3.9% from a high of 8.5%. So yeah, things are changing, and it's really going to be interesting to see where we're headed from here. And once again, we're entering this perfect storm, folks, where inflation's going up, wages are coming down, and all that does is raises a big red flag in my mind that points to an impending recession. Not only that, we've seen a wave of notable layoffs since the start of the new year, and it's only March, right? And the list grows longer by the day. Alphabet or Google, Amazon, American Airlines, Citigroup, Snap, UPS, among major companies that are cutting thousands of jobs. And not only are companies laying off, they're closing stores as well. Family Dollar just announced they're closing 1,000 stores. 1,000 stores. Macy's is closing stores. Foot Locker will close 400 stores. Walmart closed 6 and counting. CVS, Walgreens, and other retailers, they're cutting dozens of stores, particularly in those crime-ridden locations. And I guarantee you, a boatload of banks, particularly the regional banks, will be closing locations or consolidating, given the commercial mortgage crisis that we'll be facing very, very soon. And more on that huge story in a coming episode, because the regional bank story is the next big shoe to drop. And here's one more thing you may not be aware of that's coming to us pretty fast. So have you heard the latest on the housing front? Well, more bad news. It looks like home foreclosures are on the rise all across the country. Yeah, it's been tough lately, with more and more Americans feeling the pinch from the cost of living crisis we just talked about. This doesn't seem to let up. And get this, there's a new report out from an organization, ATTOM. It's an acronym. These guys keep an eye on the real estate data. They're saying that in February alone, there are about 33,000 properties facing foreclosure. In February, 33,000 properties facing foreclosure. And that's stuff like getting a default notice, having your home scheduled for auction, or the bank taking it back. 33,000 in February. And get this, that number is up 8% from last year. It did dip a tiny bit, about 1% from the month before, but it's still a major number. Now, while this is a nationwide phenomenon that's happening, some states are really hitting it harder than others. South Carolina, for example, saw foreclosure skyrocket by 51%. Missouri wasn't far behind with a 50% jump in foreclosures. Pennsylvania saw a 46% increase. Even Texas and Indiana felt it with rises of 7 and 1% respectively. I will add, though, there is a silver lining here. And I guess that same report says that even with these jumps in foreclosures, we're still not at the nightmare levels of the 2008 crisis, if that's any type of consolation, right? I mean, geez, it's like saying, remember that tsunami that we had that took out the entire city last year? Well, this tsunami is only going to take out half that city. If that's any consolation that this doesn't come close to the 2008 financial crisis, I don't know. But it's getting bad out there. So folks, with home prices staying high, mortgages creeping up as we see inflation rising, property taxes doing their thing, which is also going up, insurance costs rising, as we talked about, repair costs going up, it looks like we could be headed for even rougher waters going forward. So the point I want to get across to you here is, do you see everything we talk about is all intertwined? How even one policy or one regulation can cascade and move like a wildfire, affecting every aspect of our life and certainly our financial life. How even though things may feel or sound good, it's usually a big red warning flag that they don't do good. And when you hear these things, these Inflation Reduction Acts, right? These Build Back Better bills, a big red flag should go up in the back of your mind saying, hey, wait a minute. What are the ultimate consequences of these things? Those are the unintended, or some may say intended, consequences of these economic policy and regulations that we see. And that's what this show is all about. And that's why we all have a responsibility to get this information out to as many people as we can, because as I always say, knowledge is power. And I also say, what you are aware of, you can control and identify opportunities. But what you are not aware of will almost always control you. But if anything you learn from this show is that you must put your own financial future in your own hands and not rely on someone or something to provide for you and your family's future. There's just too much at stake today for you to just plod along hoping that everything is going to work out on its own. And the good news is that there are more ways than ever in history today to generate multiple sources of passive income. And I'm not saying quit your job and start a new business. What I'm saying is that you can be doing both, and you should be doing both. And you should start not today, but now. All right, so with that, I do want to end the show on some good news for certain people. And there are some people out there that are making a lot of money today very, very easily. And they're called politicians. And despite their day job, which primarily consists of how to control our lives and freedom, many of these people are making millions trading stocks off of inside information. And you know what, folks? It's all legal. You and I trade off inside information, we're going straight to jail. Get elected to Congress, and the stock market is your oyster. And some of these politicians I'm going to share with you in a moment would make Warren Buffett look like an amateur investor. It's unbelievable. And last year was something else. Politicians just ran circles around the stock market, really leaving these full-time professional money managers eating their dust. It's unbelievable. So listen to this. So let's dish out about some of the hot shots of 2023. These are the top stock pickers of Congress. And leading the pack was Brian Higgins, a Democrat from New York. And this guy's portfolio was up, get this, an eye-popping 239%. Remember, the overall stock market was up 24% last year. And this guy in Congress is up 239%. And then out of the blue, he decides to leave Congress. I mean, talk about leaving on a high note, right? But it does make you kind of scratch your head like, why would he leave this pipeline of this money-making access, all this inside information where he's making bang? Something's fishy there. More on that. We got to see how that unfolds. All right, then you got Mark Green. Here's a Republican from Tennessee. He's snagging the number 2 spot with a 122% increase. Not too shabby, right? Don't forget about Dick Blumenthal. The Democrat senator. He made a killing with a 68% gain last year. But wait, there's more. Nancy Pelosi, the Wolf of Washington herself. She bagged a 65% rate of return last year. Word has it her husband Paul made a cool $1.25 million on Nvidia stock in the last 3 months alone. Not bad at all, right? And by the way, speaking of Pelosi, a while back when a bill came up to stop this insider trading, she was adamant, fought tooth and nail to block it, which she did. Let the party continue. Oh, and then lastly, you have Dan Goldman. He pulled in a 53% gain last year. And here's the kicker. Our lawmakers, get this, raked in over $1 billion from financial transactions last year, and it's all legal, folks. And a lot of that cash came from investing in companies they somehow always had the inside scoop on. So there you have it, folks. If you ever wondered what corruption looks like, this is it. And yet Congress can't seem to get its act together to pass a simple ban on insider trading. Go figure. I think maybe it's time to run for Congress. By the way, if you want to track these politicians' stock trades for free, you got to check out capitaltrades.com. Capitaltrades.com. And the capital is spelled with an O, not an A. So it's capitaltrades.com. And you can see all these politicians and all the trades they're making. It's the leading resource for political investor intelligence, and it's fascinating. And you can trade right alongside with them. Why not? They've got all the inside information, right? All right, so let's wrap it up there. I hope you enjoyed the show. I hope you got a lot out of it. Would love to hear your feedback in the comments below. Don't forget, next week we're blowing the doors on a massive story that you do not want to miss. This is a massive breaking story. Don't forget, again, my brief video on my cash flow wealth building strategy is at go.johnmacgregor.net. Check it out. I think you'll find it interesting. All right, everyone, have a great week. Aloha. Bye-bye.
Thanks for listening and supporting Full Disclosure. If you like this episode, remember to like and subscribe and follow Full Disclosure. To make a better financial plan for your future, join our Cash Flow Bootcamp, where John shows you a safe and smart way to turn your investments into a steady income stream in a fraction of your time. Learn to make money in any market. Until next time.
This podcast is a presentation of Rich Dad Media Network.